Sure. Go ahead. You want? People want to ask you this. Okay. All right. Okay. All right. At this point in time, we're going to make this an Ask Me Anything kind of session. So Melvin said, hey, why don't you just invite everybody down? This is everybody's chance to ask any questions they want. Reggie, why don't you come on up? Jim. And I want to introduce Melvin. Melvin's going to moderate or help coordinate this. Melvin Petties, he's just taken a new position as Director of Product Development for Sweetbridge. And this is your chance to ask anything you want to ask. So come on down. Melvin.
Thank you. Thanks so much, George.
Oh, that's so bright.
Oh, wow, we got questions already. If you want to come down closer to the mics, you can kind of see them in the aisles here. I believe every possible question that, every technical question that we probably could have thought of has been answered or asked. So I'm so interested in what the rest of the audience has to say and how you can challenge us right now. I just heard that one question.
Yes, I have a quick question.
Please.
You know, we have the blockchain, particularly the Bitcoin blockchain. Mm-hmm. We have the congestion. We have the high fees. We know that Bitcoin isn't fungible, and we also know that Bitcoin will not be the cryptocurrency that's going to be used in terms of mass adoption. Now, we look at Ethereum, and we notice because of the crypto kitties, we really truly have the same problem in terms of scalability. Now, when you look at all of the other things that are going on in the technology space, such as hash graphs, or all of these other unbelievable quantum physics-like technology, what do you envision right now today? If you had to pick a technology that's currently developing, what do you think we're going in terms of mass adoption, where people won't have to know the technology in order to get involved?
Yep, I think that's a great question. I just want to make sure everyone knows who's on the panel. So really quick, one more time for the folks who are just waking up, and then we're going to answer that question. Give you guys a second, please.
You first. Go ahead, man. Okay, my name is Reggie Middleton, entrepreneur. I'm a founder of Veritasium. It's a software technology consulting firm that is looking to usher in peer-to-peer capital markets.
And I've been sitting up here. My name's still Jim Radecki from Cumberland. Okay. It's good to meet Reggie, though.
Yeah. And my name is Faith Sloan. They call me Queen Wiki in the social media.
Awesome.
I like that.
So who wants to take the first stab at that? So just to recap, Bitcoin terrible, Ethereum terrible.
No, I didn't say that. I love them both.
Okay. Can you give me the short version of your question in like 2 or 3 statements?
Yes. We have the technology today. It has its deficiencies because it was first. Mm-hmm. There's a lot of things that are going on in terms of improving what we have, utilizing different technologies. That's one part of the question. The other part of the question is mass adoption, which we've been fighting with, and it's been rather difficult to have happen. What do you think in terms of mass adoption, and what do you think in terms of the next step of technology in terms of blockchains?
Okay. Mass adoption will come right before you have a finished product. Right now, Bitcoin is in beta stage officially. It's not even 1.0. Ethereum is less mature than Bitcoin. Ethereum moves faster than Bitcoin because Ethereum doesn't have the governance issues that Bitcoin has. The technological issues that you're discussing have been solved multiple times over. They just can't be applied because Bitcoin suffers from political infighting and factions. Ethereum, in terms of governance, is significantly more centralized, but that works to the benefit of the users, not necessarily from a policy perspective, but when they have a problem, they fix it and move forward. Ethereum is about to go through, and it's in the process of moving from beta 1 to beta 2 as they go from proof of work to proof of stake, thank you. As to whether that works or not, it's a gradual change, but what you're going to see is market forces come to play. Bitcoin has several competitors. Almost all the competitors are vastly superior to Bitcoin. What Bitcoin has, and everybody here should know, is they have the attention of the media. And so everybody is piling into Bitcoin. Everybody says Bitcoin is a scam, is a fad, etc. I challenge anybody who says that to accurately define what Bitcoin is. Most of them don't know what it is. But Bitcoin, in my opinion, is antiquated. If you look at the progeny of Bitcoin, the actual forks, Dash, right, very strong replacement for Bitcoin. You also have Monero, Zcash, you could run all the way down the line. The same thing with Ethereum. Ethereum is quite functional. Ethereum is tested and proven. Ethereum is, again, beta. I won't call it pre-beta because it has a lot of applications running, but beta. As it goes to proof of stake and further, you also have EOS, NEO, Cardano, many competitors. These competitors, number one, force evolution. Okay? They're not sitting still. Number two, you also have the ability to have more than one solution. Any competitor that is managed correctly will have all applications backward compatible with Solidity, which is a programming language for Ethereum. So if you could write for Ethereum, you could write for all these competitors. That's a lot of intellectual capital, a lot of intellectual firepower, a lot of financial capital going, and a lot of human capital going to solve a problem. So the issue is, long story short, I don't know the answer to that question, but it looks to be very promising in the future. You're definitely not going to have go to zero, scams, and all the doomsday scenarios. What you are going to have is, and you probably haven't heard this entire conference, massive margin compression, because all of these platforms represent a paradigm shift. Not once in the history of the world that I know of has technology ever put a company out of business or destroyed the industry. What destroys the industry is the business models that are enabled by that technology shift. Those business models allow people to make money from the side or simply make less money, less margin profit, but more profit in general by generating more revenue. So you make, instead of making 60 cents on a dollar like Apple, you make 8 cents on a dollar, but you multiply your revenue roll by, 15 times, hence you're a wealthier company. You're going to see margin compression all over the place. The financial industry, I disagree wholeheartedly with anybody who feels that JP Morgan or the big banks are not going to change. The compressions are going to get destroyed. Same thing with asset managers. They're going to get destroyed. Now, they're not going to go out of business, but they will look like Xerox. Xerox was the industry leader at one point. I don't think anybody here under 30 has used a Xerox product. Maybe a product that uses Xerox patent, but even those have been eliminated. So that's it in a nutshell. Have I answered your question?
Yes, you have. Thank you very much.
Now you know why I wanted Reggie to take that one.
I'd like to add something to it.
Lifting my hopes for this AMA panel. Yep. Would you like to come up to one of the mics? Can everyone hear the question? If you don't mind, please. I know we're recording. Thank you. Not to say that you all don't have beautiful voices that carry. Thank you.
I've worked on the sell side, worked on the buy side, done little startups here and there. Basically, I'm a tinkerer. I've always been tinkering in the garage all along. And what I see is the obvious that, again, from my looking at fundamentals, training, you kind of look at, the past and everything like that. We talk about all these companies and everything, but to me, what the obvious is that, many of what's coming down the pipeline is not even in this room. One, AI. At the end of the day, it's going to be here. I mean, I just got a notification while I was sitting here that my 20-year B school reunion is coming up. Go figure. I mean, it seems like yesterday. So looking out 20 years, I mean, that's right around the corner. And, some permutation of AI is going to be here. Two, we're about, the biggest population boom is underway. I mean, I've seen studies, I forget what it is, but, turn of the century or turn of the 20th century, there was probably a little over 1 billion people. Now there's 5, 6, 7 billion, whatever. They're saying we'll probably level off around, towards 12, but 11. They're not in the room. So it just seems kind of strange that everybody's pontificating about something that's not even here when you talk about fundamentals. So I'm just wondering, do you believe that we should be thinking, I don't even know what I'm saying, I'm commenting, but it just seems like we're talking about stuff that, nobody really knows, but more importantly, they should be looking out at these obvious equation, Pythagoras, 1 + 1 + 1 = whatever. I mean, it all.
So if I had to rephrase that,
Yeah.
just for the rest of the audience, it seems like...
And I'm a tinkerer, so forgive me.
Yeah.
I just look at stuff, so you see what I'm trying to say.
Not to put words in your mouth.
Yeah, I was going to ask you to ask the question over again. That would have tripped you up.
And we're at time. No, I'm just joking. But so just to rephrase that, so we have so many low-hanging fruit that we can pick from in the current economy that most likely can be enhanced or the efficiencies can be gained by using either some cryptocurrency or blockchain technology. why is it that so many people seem to be shooting for the stars per se with regards to?
That's not what I was
that's
saying.
Not the question.
You put words in my mouth. Actually, what I'm talking about is everybody's talking about the past. You know, you can't talk about, you know, the Cold War period of economics, right? I mean, half the world was even doing trade with each other. You can't talk about even what was going on in the 90s with Web 1.0. What I'm saying is that what's about to happen in a massive way is coming online. I mean, the 2030s is around the corner. So given this massive shift, which is human population boom, and our machine partner, which is going to be more sentient, is going to be here, it just seems like everybody's so focused on like the now. And this shift is happening, and to me, that should be the conversation. And it's just, I go to a lot of these conferences all over the world, and nobody talks about it.
Yeah, I'm sorry I have to stop you, but that's not a question. That's more of a statement and an observation. So we have no, and I don't mean to be rude, but we have to, so we have a quick plug. Where is it going to be, George? One more time. Hubbard Street Inn. All right, so we'll be able to get into lots of debates over topics like this and really ask deeper questions. But for now, I need the questions to be really succinct. If you have, if you can say what you need to say in about a sentence or two, that would be great. But if you have deeper questions and deeper conversations, we'll have an after set for those situations. So I got 1, 2, 3, and a person at the mic. Got to go with the person at the mic. Sorry.
With pulling this much money out of the system, $100 million, $200 million, do you get any sense of where the money is going to, where they're taking this, putting this money? Are they putting it into hard assets, real estate, or something else that you know of?
What was the first half of the question?
If people are cashing in $100 million, $200 million worth of Bitcoin, do you get any sense of where they're taking that money and putting it after they've cashed it out? That's a lot of Lamborghinis.
I can speculate that it will go into diversification. Let's assume, and I'm not saying it's me, of course, I have a low-cost base in Bitcoin, Ethereum, or any other cryptocurrency. Let's say 20 cents. Okay, it's now trading at roughly 10,600. Have significant gains. Now, you have, let's take regulation and law and not paying taxes out of the equation. With those gains, you would probably want to diversify. So you sell off a decent amount, over your cost basis, and then you sell Bitcoin, you buy Ethereum, you buy real estate, you buy additional digital currencies. There's a whole lot to choose from, and because, in my opinion, the discipline and ability to value them still are not there. I disagree with everybody who says you can't use fundamentals. Fundamentals are always going to be the case. 2 + 2 is always going to equal 4. Always, each and every time. So if you use that simple regime of calculation, you simply go into and spread your wealth. You can afford to take significant losses, and you can afford to have a lot of patience, which is what most professional or institutional investors can afford, because they're managed by professionals who have to meet quarterly bonus requirements. They have to report quarterly and annually, etc. The only investor that can really compete with a low-cost basis cryptocurrency or digital asset investor would be someone like a family office, and a family office that gets it. So I have family office members that approach me, and they're more than willing to take a long-term perspective, despite the fact there's plenty of liquidity in the product. That's where most of the money is going, if I had to take a guess or speculate.
Excellent. Do we have one more question that we can entertain? And I have a few that I wanted to ask the panel. Fight. If you could step forward, please, or up to one of the mics so that we can get your question recorded. Thank you. Yeah, you can come take this one, please. Yep.
What's your advice for an individual that's trading between 50,000 and 250,000? Like, after listening to the guy talk about taxes, what would be the safest and most efficient route?
Are you asking him or me?
Either of you, the panel.
Okay. Well, personally, I'm an investor. I'm not a trader. I believe that there's diminishing returns in trading. If you look at the wealthiest people in the world, Fortune 500, look at the top 10, how many are traders? Look at the top 20. As a matter of fact, The only way to really gain wealth is to be in the financial industry, where that's the only industry where the employees make more than the investors, amazing enough, or to be an investor that had foresight and used fundamentals. So if I have 15 or 20,000, number one, it has to be risk capital. Assume it goes to zero. If you can't afford it, then you shouldn't be putting it in. But if you had 15 to 20 of risk capital, I would do my own research, no matter how long it took, and I would invest in the fundamentals. You know, the companies where it looks like, or the entities or platforms where it looks like 2 plus 2 may equal more than 4. Diversify, put it in, and wait it out. Don't trade it in out, because that's a fool's game in my opinion. I know I'm in Chicago, the home of the trading pits, okay? But it's never worked for me, and I've never seen it work for anybody who didn't have inside information over time. You know, I'm not talking about 1 year, but look over the 10, 15, 30 years. That would be what I would do, and that is what I do, actually. You know,
I was going to say that would be a good segue into the value prop for each of your organizations and what differentiates you from your competition.
Okay.
You want to roll right into it, or?
Okay, so what we do is we represent, or we are looking to usher in peer-to-peer capital markets, traditional legacy capital markets, hub and spoke, Federal Reserve, money center banks, JP Morgan, Citibank, et cetera. You have exchanges, then you have the periphery around. They trade through the center and then back out. Lots of inefficiencies. Everybody who touches the capital takes a piece. We'll enable this guy to trade directly with that guy, to trade directly with her, okay? Custodying your own capital at all times and remain in having control. Peer-to-peer capital markets. We use smart contracts, which we control, which we call financial machines, a bunch of contracts chain linked together that replicate industries. The first industry is the industry that pays 60% of gross margins out the compensation. That's the financial industry. Just to show how egregious that is, that 40 to 50% of gross margin is before the expenses of running the business. So you pay out in a good year 60% of your revenue to pay your employees, then you pay administrative expenses, selling, etc. What's left is what the investors get after taxes. So that's low-hanging fruit. We marginalize stuff at 5%. There's no financial institution that can compete, none. Now, especially if you pay through the Wall Street culture. So that's one thing we do. The next is to go industry after industry. We pick every industry that has a fat margin. Now, if I do business with him and you're the counterpart, you're the middleman, but you add value. You provide a service that not only am I willing to pay for, but I desire to pay for. You can't be disintermediated. We want you in. But if you're that guy that bought 2 feet of space in front of the door, when that hot, handsome dude over there in the lower left-hand corner, right-hand corner, catches on fire due to the fact he's so hot, everybody runs out. Everybody in this auditorium would love for that guy to die. Okay, so we provide the bridge to get around him or the daggers to take him out. Okay.
Jim, you can take us home.
I mean, from our perspective, we look at this from liquidity providing perspective, right? We support the ecosystem out. We try to identify great strategic partnerships to invest throughout the ecosystem. But we look at it, our job is to provide institutional size and quality liquidity to the marketplace. And so when we look at it, like when people come and they say, you know, what should I invest in if I'm an investor? We look at it as saying, look, we cater to the institutional sized investor, and much like Reggie was saying, you have to look at this as, from my perspective, what our counterparties tell us is they want to be looking at this as a piece of their investment portfolio. Normal risk management practices, and we at DRW have 25 years of risk management experience to lever into being able to trade these volatile, illiquid, and largely misunderstood underlyings. And so we go in that with this, that's how we go into it when managing our portfolio and how we try to bring prices to the street and the outside. But I think I've seen a lot of our counterparties lament that when they come to us and saying there's a lot of people out here that are just looking to get rich quick and not deploying risk management practices that we would think would be sane to a portfolio. So we just go back to, look, we're here to provide liquidity. We're here to support the industry through our time, commitment, liquidity, and strategic investing. And from that perspective, you know, people really need to be smart about how they think about managing their liquidity risk. And that's where we leave it at that.
And also, I'd like to comment, Risk and volatilities come up often. Bitcoin has been maligned by people who should know better, and Ethereum, saying it's very risky, it's very volatile. Volatility, at least in the typical investor's portfolio, who's usually long only, very few guys go long short equities or commodities, very few people go short, most but go long. So if you're long only, volatility is not your enemy at all, okay? I give you $1, okay? The value of that dollar shoots up 50,000%. The volatility explodes. Do you have a problem with that? No? Does anybody have a problem with that? So that's not risk, okay? That's an academic definition of risk, standard deviation, volatility. If you're long only, your only concern is whether it goes down in value. Okay, so downside movement should be the only volatility calculated. If you take downside movement and you take that out and penalize Bitcoin for it and reward upside movement, Bitcoin is less risky on a risk-adjusted return perspective. In other words, the amount of risk you pay in exchange for the amount of rewards you get. Bitcoin is less risky than $1, than the S&P 500, than every major stock, than gold, than oil, than silver, every major asset class. You get more return per unit of risk paid than anything. That's traditional legacy. The same thing goes for Ethereum. The same thing will go for the